Folks, welcome to a very, very early Thursday night Stock Charts Live. Why am I doing it so early? It's because I can't go live tonight. I got things to do. So I wanted to do them this morning because it kind of makes sense in a way due to the fact that normally I like to say one trading day left to go, meaning Friday. Well, today is the last day of the month and of the quarter. So I figured, why not? So let's talk a little bit about what we're going to be talking about today. We're going to be talking about Europe. Europe is the proximate reason as to why the U.S. dollar is shooting through the roof, along with yields, no doubt about it, along with yields. But we're going to go over the reasons why the euro is just simply getting annihilated. We'll talk about the Fed's balance sheet. We'll talk about the events over in Washington, D.C., and how the wheels are starting to come off the progressive bus. And while they still hold the reins of power, it looks as though they are falling apart and falling apart quick. Unfortunately, they can't fall apart quick enough for us. Then we're going to talk about the weekly charts. How are we poised to close out the week? I didn't do market wrap last night because I wanted to see how the futures action would open up this morning. So we're going to talk about the futures action as well, and of course the daily price action. So thanks for being here. Let's first give a shout out to our sponsor. Our sponsor is TrendSpider. Folks, automate your grunt work, speed up your technical analysis, and improve your accuracy by using automated technical analysis. TrendSpider delivers it to the retail investor. So take advantage of their 7-day free trial offer. Head on over. If you're watching this on YouTube, use the link below. If you're watching this on any other platform, go over to their website, get a 35% discount off of their product using discount code CON. Where is it? I can do something really cool here. CON. There we go. Pop. Look at that. My new software, my new toy. CON 30. Oh, excuse me. 35 CON. 35 CON is the discount code, 35% off. Go over and watch their demo tour and start your 7-day free trial offer. TrendSpider. Okay, let's get to the topics du jour. Okay, so over the past several days, we've seen the U.S. dollar rip through the ceiling. And we're going to go over those charts in a moment. We're going to take, again, a look at a weekly view of the U.S. dollar. With one trading day left to go, we have a weekly breakout. We have a monthly breakout. One of the best breakouts I've seen in a long time. I'm not happy to say that because that hurts our gold and silver trades. Aside from that, here's what's going on. Take a look at the euro. The euro is falling apart. And ultimately, this is what's going to happen to the U.S. dollar. But as it stands right now, the euro is the currency that is getting hit hardest because they haven't had their December meeting yet, where they're expected to taper. I would argue they may have to go faster than that because energy prices are just ripping through the ceiling. So here's a chart of the euro, a weekly time frame. You could see that we have broken weekly support. We are now in free fall with the next support level being around 107.25 on the euro. And that's a big move. And I should say the FXC. My apologies. I'm going over the chart of the FXC. So why is the euro in free fall after it's been in a trading range for a number of years now? The reason is inflation. Spain's inflation levels hit 13-year high, driven by increasing energy costs. UK energy crisis shows danger of net zero emissions policy. So, as you can see, their net zero emissions policy is a progressive plan, their agenda. We're getting it here for those watching overseas. We're getting impacted here by this nonsense of climate change. Now they call it a climate emergency. It was global cooling back when I was a kid. Now then it was global warming. Now it's just a generic, oh, well, there's a crisis. Get afraid, get afraid, get afraid, get afraid. Give us all your rights and we're going to take care of you. Don't worry about it. Don't look here. So it's blowing up. It's blowing up in their faces. So the ECB is supposed to meet in December to discuss taper. No guarantees, to discuss taper. I would argue that they're falling apart so fast. The euro is falling apart so fast. The global economy is falling apart so fast due to inflation. They may have to act quicker. Add to our woes the fact that what we have here, let's get rid of that. What we have here is also a leadership, whether or not it be in the United States, the poor people of Australia. I've had so many members that are from Australia. Nice people, good people. The brutality, I'm obsessed with it. I can't believe what I'm watching down in Australia, of all countries, along with Canada. They just arrested a minister, a Polish minister. He escaped he's around my age. He escaped the Iron Curtain. He's from Poland. Wanted to come to Canada I'm in New York, but he went to Canada to escape authoritarianism. And where is he now? He's in jail. So his crime, he baptized his daughter. Think about it. So the rule of law is being suspended. They don't care about your religion anymore. The only reason why the United States was founded was for religious persecution. We're going right back down that road again, unless we stop right here, right now. But they won't. This is everything that we're going over right now. The energy crisis over in Europe. The Germans were begged by President Trump not to have that pipeline built to have gas sent over from Russia. What happened? Russia is slow walking the gas over to Germany, as they've done in the past. It's not a shock. They were warned. They've done it in the past. They're going to do it in the future. It's control. And one thing the Russians like is control. You can't blame them. They're looking at the Germans and the Europeans as suckers. Also, these ridiculous net zero emissions policies. They had a coal plant, Sweden, I think it was, shut down 2 nuclear power plants. 2. That's a lot of energy. They shut them down. They had, you can't make this up. They had an energy shortage. What are they doing now? They're starting up one of their coal or oil producing factories or plants to help make up the difference. So they're adding to pollution. It's crazy. This is liberalism. It's AIDS. It's pure AIDS. So this is from the United States here. It doesn't make me happy to say this. You have Sweden, which never locked down. I don't think that they have mandates. Fact check me on that. I don't want to be wrong. They didn't lock down, no mask mandate, none of that ridiculousness. Our death per million rate is far beyond Sweden's. They never shut down their economy. Never shut down their economy. They're flatlining. We are accelerating with most of our population coerced and forced into getting not 1 jab, not 2 jabs, soon to be 3 jabs. Apparently, Israel is waking up and saying, okay, yeah, that's a problem. You're asking us to take a 4th jab, and we're still seeing rising cases. Get real. Here's the death rate, California versus Florida. Oh, the Floridians are such horrible people. They never wanted to lock down. The Californians, good communists. And, well, take a look at the Californians in blue. And this is the California versus Florida COVID-19 mortality rate per 100,000 through September the 22nd. Fairly recent data. And you could see that the death rate in California is on par, if not higher, than that of Florida. At what point do these politicians step back and say, okay, we were wrong. We need to reevaluate. At what point? It's like you're trading a stock and you're wrong. And you opened up the trade as a short-term swing trade, but you're wrong. You don't want to admit you're wrong. I've been there. I've been there. I'll be there again. But you're in the case of a trader, you're more mad at you. But in the case of these nefarious sociopath politicians, they're mad at the public. They need to shift blame to the public because they want to get reelected to office. So they're going to blame you. They're going to blame I don't even know if I could say it, unvaxxed. I'll probably get banned on YouTube. Either way, I'm on several different platforms. That's why I'm simulcasting right now. Facebook, DLive, YouTube, Twitter. I wish Rumble would get on here so I could they're not offered yet, but I'll be on Rumble soon enough. And then I'll probably set up a separate show for Rumble so I can talk like a human being, like a free American. Be that as it may. More totalitarianism. This is not good. This destroys the psyche. Australian corporations finally waking up. Good people, these Australians. Australian corporations, there's a typo there. Corporations rebel against government draconian COVID lockdowns. They have media blackouts. They don't want you flying over the Melbourne protests because the people are flipping out over. They're done. They're done over in Australia. So now the corporations are joining in. Apparently, I was unaware of this. They have elections in May coming up. How these politicians plan on getting reelected, I have no idea. I guess they're going to have mail-in ballots so they can steal the election. I have no idea. But these guys are doomed if they don't rig the election. So we live in interesting times. We really, really do. And the good news is that the progressive agenda, we see you, and they're failing. Look no further than here in the United States. We finally have, and Joe Manchin's always been a fairly good guy. I never had heard of Kristen Sinema. I believe she's out of Nevada or Arizona. Forgive me for not having that up there. But she's a Western senator as well, standing up with Joe Manchin. God bless them. They're blocking this $3.5 trillion. This is just one package. It's actually two. You have $1.5 trillion that was signed off on by our Republicans. Thank you, scam artists, as well as the Democrats. And now you have the $3.5 trillion social welfare spending. I mean, nothing goes to a percentage. I think this of the $1.5 trillion, not stimulus, infrastructure bill, like 10% of it goes for infrastructure. Everything else is just a remaking of the United States from a meritocracy where you come here, you work hard, you do well, to one where you come here, you go on welfare. We're already bankrupt, and that's what Joe Manchin is saying. He's like, listen, man, we already have programs that we can't afford. You want to add more now? You're out of your mind. And he's a Democrat, so and he's not borderline Republican. He's from a blue, red. I don't know why Republicans are red and the Democrats are blue. It should be flip-flop. These are red communists, these son of a bitches. So, and if you're a Democrat and you're middle of the line, I don't mean you. I'm talking about the far left progressives, communists, Marxists. So you have Manchin and Sinema. God bless you. Hats off to you. Stay strong. If I lived in your states, I would vote for you in a heartbeat, because most of our rhino representatives on the Republican side, they're worth a hill of beans. They're worthless. At least these two are fighting for what they believe in. And they're from the Democrat side. So a pox on both their houses. Taking a look at the Fed's balance sheet. I usually go over this on every Thursday night Stock Charts Live, but it hasn't been updated yet by, this is the St. Louis Fed, I believe, that puts this out, the Fred tool. And this is a great website. Yeah, this is St. Louis Fed. And our debt just keeps rising. They want to add to it. And you got to look at it this way. You know, the central bank is not supposed to be in cahoots or have a partnership with Treasury. It's like they go to Congress to sit next to each other so they can get legislation passed to help finance this bubble. It's supposed to be the Treasury is supposed to go to the Federal Reserve and say, okay, we need X amount of money. It's like the banker sitting on the opposite end of the table from Treasury saying, okay, are you going to raise taxes? How are you going to pay back this debt? We're a bank. We're supposed to make money, but they don't. They're in cahoots. So they're going to finance this 3.5 trillion. If they pass it, they're going to finance it. No doubt about it. So hopefully they don't pass this legislation. Hopefully, cooler heads prevail, and the progressive movement just blows up. Let's go to the weekly charts. Oh, a bunch of comments here. Paul, good morning. Top of the morning to you, Paul. What do we got here? News bites. Bitcoin is effective replace gold. Yeah. Yeah, I don't believe that for a second. You don't see central banks loading up on gold. You have China, Russia, they're just buying gold hand over fist. So I don't believe that for a second. And you know, one thing that people need to really, and I'm aware of Chatmath. I can never say his last name. I agree with him most of the times. He comes from very, very humble beginnings. I love the way he I think he's from Bangladesh. He grew up very poor. I believe he's in the United States or Canada, one of the two. Correct me on that. But I don't agree with that Bitcoin is going to be the new gold. Certainly, it's taken some of the luster off of gold, pardon the pun, with the new generation. But what people need to appreciate is that in this bill that's being passed through Congress, and they're probably not going to let this go, and whatever they pass is going to have this included. And what that includes is the digital dollar, the digital euro, the digital yuan. The digital yuan's coming. It's foregone conclusion. So do they want to have a competitor to the digital dollar? No. And I'm sure in some form or fashion, Bitcoin will exist, but look at what China did, making it illegal. So I'm not going along with that. The last thing that the Treasury and the Federal Reserve are going to want is a way to escape the digital dollar, because they want vaccine passports. That's to track your movements. That's step one. That's here. And it's coming to the United States. It's here in New York City. It's in Europe. They're protesting in Australia. That'll come soon. I don't know if they have it rolled out yet. Canada, it's being rolled out. The next step, phase 2, is the digital currency, digital fiat. And that way they can have the social credit score, so that if you weren't a good citizen, they throttled back your buying power. It's your money. But the government's going to manage it. They're going to dictate what you can buy. You're not feeling well. You had too many quarts of scotch one month. Well, you know what? No more scotch for you. That's how we're going to control healthcare for your own good. What are they doing over in Australia? They're beating people up for their own good. This is totalitarianism. And totalitarianism does not like competition. That's the very essence of totalitarianism. So I respectfully disagree with Chop Mouth. Who else do we have? Good morning, Bobby. You are the only one that I listened. Thank you, sir. Thank you for all your insight. I'm in California and want to move out. I feel the SPY will turn red at the open. Your opinion? Well, today is the final day of the quarter, so it's probably going to be a fairly volatile session, but I'm not going to doubt it because you're going to have some funds that are closing out their fiscal year. What are they going to do? They may just book some profits. So it's going to be a volatile session. And if history's any guide over the past several trading days, yeah, they like to paint the tape green and then fade into it. That's why I've been saying to members, don't go buying at the open. They're going to fade it. Today may be a little bit different, but ultimately when we go over the daily charts, we'll talk about how I believe they're going to close out the day, because yesterday was not good. It's been a poor week. So stick around. We'll go over the weekly and daily charts in some cases. And before we log off today, we're going to go over the pre-market futures. I'm purposely doing that late today so that we can let time lapse and get as close to the open as possible. Okay, so thank you for the comments and questions. Let's go to the weekly charts. What do we have coming out today today, Thursday, right? We have initial jobless claims. So last week, initial jobless claims came out and they were hotter than expected. Unfortunately, more people than expected lost their jobs. And even more unfortunately, I said to Mike, apologize for any noise. The prior report was moved higher as well. So if we get a stronger than expected initial jobless claims, meaning more people file unemployment than last week, and God forbid they revise up last week, you may get a market rally. I'll stop there. Yes. If we get worse than expected economic data, we may get a market rally. Why? The markets want bad news. They're worried about taper, so they're selling off. And if we get horrible economic data, poor economic data, well, then they'll get a bit of a reprieve that the Federal Reserve can't raise rates. They have a mandate to ensure price stability. God forbid they ever did that in reality. And ensure that you had a certain measure of employment. I forget what the specifics of the mandate are, but it's to ensure employment. If you see initial jobs claims rise, that's going to be a headwind for the U.S. dollar and for interest rates. So watch that very carefully today. That comes out at 8:30 a.m. Eastern Standard Time. We're going to have GDP, the revision for Q2. I believe that this is the final revision. You're going to have a bunch of Fed heads out here today. Bostic, Harker, Evans, Mary Daly, Rosengren, Kaplan, adios, you, in my own personal opinion, you criminals. Friday, tomorrow, core inflation, watch that. The Marquette manufacturing PMI for September, any number above 50 is a sign of expansion. Any number below 50 is a sign of contraction. The same measure holds true for the ISM manufacturing index. We slipped below 60 a couple of months ago. And we have Harker back out tomorrow. What are these people talking about? And Mester back out again tomorrow. Criminals. Okay, let's take a look at the weekly charts. Let's get rid of this. Okay. We're going to begin with the 10-year Treasury yield. And the 10-year Treasury yield broke out last week. Continuation breakout. We're very extended here. I'm expecting a rally in bonds, a pullback in yields. Does that mean we're going to roll over? We're going to head back down to historic lows on the 10-year yield? No, no. To do that, the Federal Reserve has got to get far more aggressive with their QE buying, and they're talking about buying less, law of diminishing returns. I'm not expecting it unless, of course, they reverse course. What's that going to require? A market in free fall. We're not there yet. This blip on the screen of a correction is nothing. So expect a pullback at some point in time in the next several trading days on yields. Daily chart. Yesterday was a very nice day. I had expected, I was shared with members, I thought we were going to get a pullback. We did get a pullback. Why did I think we were going to get a pullback? Because we were leaning into the third standard deviation Bollinger Band on a daily time frame. Yeah, we got the pullback, but bonds were so weak, they gave up their gains, allowing for bond yields to rally back with a bullish key reversal on the day. Very strong price action. I'm not going to be the least bit surprised to see higher highs here today on the 10-year yield. Moving on to the Tllt, 20-year bond ETF. Weekly chart. Major breakdown on the week unless we rally back. One trading day left to go. Volume is going to come in probably above average. Let's take a quick peek at the monthly chart. Yeah, you can see here, this is not good. Allow me to illustrate. Here you have a lower high. So if we fail to rally back today and we give up this support level at around 150, we're at 144.34, the close as of yesterday. The probability of us rallying back is highly improbable. So this breakdown on a monthly time frame is quite likely and very, very ugly. We have a lower high and we're probably going to head lower. For those wondering, what does that mean for you? It means higher yields. So if the markets rally back, what do you want to look at? The banks, energy, daily chart. So the TLT actually closed up higher yesterday, but we did close off the highs of the session, well off the highs. We closed up on volume. We're very oversold on Stokes. Again, I'm expecting a rally here at some point in time in the next couple of trading days. Today is going to be volatile, tomorrow being the first of the month, and in many cases, the first of the fiscal year for certain institutions is going to be volatile as well as they reposition for their new year. Tips. Treasury inflation protected securities. We're holding weekly support. No need to go to the monthly chart. Not much will have changed. Daily chart. Daily chart, we broke support. That was on Tuesday. Volume yesterday was light, was below average. So no compelling reason to go buy tips here. The US dollar. What a week, man. We broke out. We had been in a trading range since June of 20. And this week we've broken out. So if you're wondering why gold is weak, silver is weak, look no further than the US dollar. What's driving the dollar up higher? Yes, taper, but also the fact that you're seeing the euro fall apart. The euro is just dumping. So, and the reason why the euro has such impact on the US dollar is that the euro makes up 55% of all currencies that trade against the U.S. Dixie basket. The yen is the second largest component. So this is a monster chart. And if you want to take even look at a more scary chart, the monthly chart. For 3 consecutive months, we were trying to break out above 92.50. This month, we're going to do it. Absent some major event. So this is not good for stocks, in particular exporters, because goods become more expensive overseas as the dollar rises. Now, the US dollar on a daily time frame is quite extended, but we can go higher. You had a lot of shorts in the US dollar. Those shorts are covering, they're flipping to going long. That's why you're seeing this massive movement in the US dollar. The VIX, strong week so far. Up 27% on the week, daily chart. As a matter of fact, let's go to a monthly chart as well. See how the month is looking. Up nearly 37% on the month. No breakout yet, though. Daily chart. An inside day yesterday, no new high, no new low. The Dow Transports, weekly chart, bearish key reversal bar. We had a bullish key reversal bar last week, bearish key reversal bar this week, daily chart. Yesterday, down over a half percentage point on volume that declined. Let's take a quick peek at the monthly chart. Not horrible, but not wonderful. Jury's out. What we do have is a lower high and a lower low on a daily time frame. The Dow Jones, the daily chart, bearish key reversal bar on the week. Stokes are weak and getting weaker. Daily chart. We closed up yesterday, but we faded off the highs of the session. Volume below average. The S&P 500 weekly chart, down over 2% on the week. On volume, which is light. Daily chart. Let's bring up my other. Here we go. You can see that on a weekly, daily time frame. We've been putting in lower highs and lower lows. So there's no reason to go buying this market until such time as we hit a reasonable support level on light volume or we break out. Here's a monthly view. Not pretty. So let's update this. Let's throw up a lower band of support. Remember, 1 trading day left to go. And we have a breakdown. And not only a breakdown, folks, but we have an outside reversal bar. So not pretty at all. MACD histogram really lost a lot of steam this month. That's momentum. Small caps, of which we have a short position on. We added to that short last week. And the weekly chart is no bueno. We have a bearish key reversal on the week, one trading day left to go for the month, but one trading day left to go for the week. Two trading days left to go for the week. Sorry about that. Still on my first cup of coffee. Take note of your Stokes, lower highs, lower lows, RSI poised to break 50. Let's take a look at a monthly chart. The monthly chart, we're poised to close down. We would need to rally back roughly 2% to close flat or up. That has to happen today. Daily chart. We're probing support. We held it at the 220 mark. If we break 220 on the IWM, we're going to 217.50. We break 217.50, I'm looking to add to shorts. And if we break 215, well then, in all probability, we're heading down here to 205 on the small caps. So I'm not ready to go adding more to shorts yet, but we will be looking for a good opportunity to do so. The triple Qs, the leadership name that has led us to where we are today, is not doing well. Rising yields, not good for the Qs. Let's begin with a monthly chart. Just like with the S&P 500, we have an outside reversal month or a bearish engulfing month. Not good, very bearish. One trading day left to go in the month. Two trading days left to go in the week. Weekly chart. Here is your rising up trend channel. Oh, this is a monthly chart. Sorry, monthly chart, mislabeled. I'm going to stick with it anyway. Note how we broke out above the upper band of resistance on a monthly time frame. We're poised to close back down below it. I had expected, honestly, a parabolic blow off top here. Maybe we'll rally back today. Maybe we'll be able to recapture the support level. We're not that smart. The market's going to tell us how we're going to close out the day. So I'm not ready yet to say we're going to break the support level. We have one trading day left to go in the month. But, man, if we break to a new lower low on the month in October, look out below. Daily chart. Daily chart. Continuation move lower. Stokes are weak and getting weaker. Bearish key reversal bar on the day. And I was asked earlier, about, well, I'm just seeing your message. It was blocked by some autoresponder that my software uses. Hopefully he's still there. Okay. RB asked, do you think that will turn red? Well, if history's any guide, you know, when you get a sell-off, what CNBC, Fox Business News, all the mainstream media does in the morning, they sell hopium. They want the amateur guy, the little investor, to get excited because they got some slick back fund manager or bankster on their airwaves. What's he going to do? Talk down his book? No. So what they want you to do is say, you know, this is the opportunity of a lifetime. Get excited, get excited, get excited. Chase the open. You become the pool of liquidity that they sell into. It's been around since the dawn of time. It's not going away anytime soon. So would I chase any morning rally? No, no effing way. The only way you know that the market is probably at a bottom is when you have seen a bloodbath of a sell-off in the morning. You bounce off of historical support levels, and then you reverse to close green on the day on massive, massive up volume. We're nowhere near that yet. And frankly, this is hardly a blip on the screen in terms of a correction. I mean, let's take a look at a monthly chart. The Qs are down 5 1/3% on the month. That's nothing. This is nothing. So now is not the time to go putting money to work. Keep your gunpowder dry. There's going to be a great bout of buying opportunities soon. I mean, have you seen ARK funds? You want to take a look at a nightmare. Here's ARC. Lower highs, lower lows, breaking weekly support. I mean, they've been talking about this woman as if she's Joan of Arc. I hadn't heard of her 6 months ago. Then all of a sudden they're talking about her. She's been around forever, speaking the gospel. And I'm taking a look at her positions. I'm like, she's out of her mind. She's out of her mind. She bought coin like near the top. Hood at the open when it first went public. I mean, the shares are breaking down and breaking down hard on her funds. Here's Hood. Not too bad. I had expected worse. But it was trading at 85. Now it's at 44. What gives here, man? I don't know when she bought it. I don't want to badmouth her on that because I don't know what her basis cost is. XLF. Weekly chart. Bearish key reversal on the week. Now, here's a sector that should be doing very, very well. Yields rising. The banks should rise. Why? Net interest margins expand. But as I've said, don't expect the banks to outperform the S&P 500 if the S&P 500 goes into a correction. They're not. They're going to trade with the overall market. However, if the S&P 500 finds a footing and yields consolidate with a bias to the upside, buy the banks. But so far on the week, bearish key reversal bar after putting in an awesome week last week. But what we need to keep in mind is that what we're doing here is we're retesting a breakout point. So while this is a bearish chart, it doesn't mean ignore it. And I shouldn't even say a bearish chart. Forgive me. Inaccurate statement. Allow me to amend my statement. Why didn't it just save my annotation? You son of a bitch. Let's go to Jpmorgan Chase. Similar chart. I'm pretty sure that's saved. I just went over this for fellow member Robert the other day. Wrong list. Weekly chart. There we go. Okay. So what we want to see here on the banks is a retest of the breakout point. This is JPM. For whatever reason, it wouldn't let me save my annotation on the XLF. So JP Morgan, beautiful, beautiful week last week. Bullish key reversal, continuation breakout this week. It's still up on the week, for God's sakes. Yes, it's given up a lot of real estate, but I'm looking for a retrace back down to this 160 level. See if it holds. Probably get a rally. JP Morgan looking good. I like the banks. If there's one sector that's going to rally on any turnaround here on rising yields, it's going to be the banks. Daily chart, they got ahead of themselves, pulling back, retesting support levels. Expect a continuation move higher as the banks find, I should say the markets find some footing. The XLK, technology. We had a beautiful week last week, bullish key reversal bar. This week, very close to an outside reversal bar. Not quite, though. We didn't put in a new weekly high. Daily chart. We broke down last week, continuation breakdown this week. Rising yields, avoid technology. Semis. Horrible week. Beautiful week last week, bullish key reversal bar. You'd expect on this bullish key reversal bar, we're going to new all-time highs. And we didn't. It was a head fake. We broke not one support level, but two. RSI and Stokes have broken support. One trading day left to go in the month. 2 trading days left to go in the week. We'll see whether or not it could be salvaged. LABU, biotechs, bearish key reversal bar. They were looking good earlier in the week. Not good so far on the week. Daily chart. Very bearish. Energy. Weekly chart. up, looking very good. Look at Europe. Look at China as well. China has a shortage of energy over there. Didn't help that they're boycotting Australia. Natural gas, this is going to pull back. So I love natural gas, but it looks like we're going to pull back on a weekly time frame. Big volume, still up on the week though. Here's oil. Oil broke out last week. Continuation breakout this week. A little bit of a fade volume. It's too early to see. There's 2 trading days left to go, so I don't want to talk about volume yet. All right. Let's talk about gold. Oh, we have positions here in the gold mining stocks. But what's helping us is our short. We're short of the Qs. We're short of the small caps, for which I caught a lot of flack over. A lot of flack. For going short, I never caught flack in my life. But for the past month, man, I got hammered. But I was right. Gold, weekly chart. We have 2 trading days left to go. And if I said during any point of this broadcast that we have only 1 trading day left to go in the week, my apologies. I keep thinking monthly, end of the month, end of the quarter today. So forgive me for doing that, if I did do that. Oddly enough, we've broken down on weekly support, but Stokes are still putting in higher lows. Interesting. Weekly volume, light. And you take a look at gold on a weekly time frame, it's down a little over 1.5%, 1.64% to be exact. Let's take a quick peek. At the S&P 500, which is down over 2%. The Qs are down over 3.75% on the week. So on a relative basis, gold on the week is outperforming the equity market. Think about it. That doesn't mean you should step in and buy gold here, folks. Not until that US dollar begins to stall out. Daily chart. You can see I have overlaid here the US dollar in gray. As the dollar rips higher, gold getting hammered. We're nearing support between 1720 and 1724. We're in a trading range right now. Gold miners, NUGT. We've taken a hit on these. I'm not going to lie. We've been selling covered calls. We have not been willing to add more here because the chart just has not been that attractive. The 40 level, if we begin to base there and we see weakness in the US dollar, then it becomes attractive. Stokes are very oversold on a weekly time frame. Daily chart. Horrible day yesterday. Bearish Q reversal. This is a leveraged ETF, so down 3 1/3%. This is a 4-hour chart. So these Stokes are still ugly, but what happens when you get a rounding top on your stochastics down below the 20 mark? It usually results in one hell of a counter trend move at some point in time. Does that mean that it's a bottom? No, it does not. You have to go through a process to find the bottom. You got to have pullbacks, retests, pullbacks, higher lows. Then you have to have higher highs. Then you know you have a bottom. Right now, very early stages of a probable counter trend rally on the NUGT, on the gold mining stocks, silver mining stocks. So we're in a descending wedge formation. Is there room to the downside to go? Yes, because every time we tap the upper band of resistance, we go lower. But we're very close to a reversal here and a counter trend move. On any counter trend move, it's my plan to sell covered calls to generate cash flow. We've been doing that every week for a while now, and it's offset some of the impact of the downward move. Certainly not all of it, but it's nice to have that little cushion of cash flow coming in. Our energy plays, OPTT, up on the week, but we faded off the highs. We're up over 5.5% on this one. Our other energy trade, ETRN, we're up 3.5% on the week. Continuation breakout. So energy is working well for us, whereas high beta, Coinbase, not so much. I'm ready to stop out of this and move to the sidelines. And that is, I think I have a chart request for one of our members, and I believe it's for gold money. I'm going to hold this. It's a small cap play. This is a way to use gold as a currency with your debit card, gold money. It's co-owned by Peter Schiff. And Peter Schiff is one of my favorite economists out there. If you're not familiar who he is, just look him up on YouTube. He's got a podcast. We have broken support. This is a very high beta name. Would I go adding here? No. I would go adding at 1.62 per share. Should we head down that low? That's a big move on a percentage basis. Daily chart. We're oversold on a daily time frame, but we can go lower. 1.62 is the mark that we're looking at. And we'll look to go adding more. And we have a message. Just say hi to you, Will. All right, folks, that is it. This is our Thursday night stock charts live, but in the morning of Thursday. Normally we're on Thursday nights. Couldn't do it tonight. And besides, we have a very volatile market. I want to take a look at the pre-market futures action. It's now 6:39 in the a.m. Eastern Standard Time. Gold is falling apart. No great shock. Why is gold falling apart? I don't even need to look, but we will anyway. The dollar has resumed its rally. We do have resistance above. We have economic data coming out at 8:30, which may impact the dollar and gold, obviously. Let's take a look at bonds. The 10-year Treasury note is up slightly. It doesn't look up slightly, but it is up slightly. We're off the highs of the session. That means yields are flat. Taking a look at this trajectory. This is a 15-minute chart. Let's go back to the dollar for a second. Now, we've already taken out yesterday's highs. Wow. Amazing. Let's take a look at the 15-minute chart. I want to see the rate of change here. Yeah, this is what I kind of figured, is that we're leaning into the third standard deviation Bollinger Band. This is not going to last very long. We'll probably get a pullback. I'm not saying the dollar is going to crash or anything like that. But this rip up higher looks to be a short covering rally in advance of economic data. Let's check out the euro. Yeah, look at the euro. This is what I started out with. The euro is under a ton of pressure. That the ECB is going to have to come out and start jawboning the bond market to drive the euro up higher, or we're going to need to do something here to weaken the U.S. dollar, because the stronger U.S. dollar is going to hurt exporters, the exporters that we have left here in the United States. Let's go back to a 4-hour view. Let's take a look at equities. The Russell 2000, which we are short, is up in the pre-market. They're painting the tape yet again. We're off session highs. I would not go chasing the rally. For all I know, Russell 2000 is going to go to new all-time highs today, okay? But we don't want to go chasing the market, hoping that that occurs. We want to see how it closes out the day. If it closes with a bullish key reversal bar above support levels, maybe it's time to cover shorts and get long. Who knows? The S&P 500 up 0.4%. We recaptured the support level overnight. Do we retest and hold? Jury's out. The NASDAQ up 0.43%. Lower highs continue. Do we break to new lower lows? The VIX 4-hour chart. It's down on the session, but off session lows. And I do believe that is it. Folks, thanks for joining in. Have a great trading day, a profitable trading day. Enjoy your weekend, and I will talk to you soon. Be well.